All right, here we are again, guys. All right, so conviction to the trade, right? I just kind of wanted to share a manual trade where went ahead, took an entry, and I'm kind of watching it. I have, my pain threshold for this position size, for this percentage, where I would feel that I might as well exit, right? Because I'm only going to give up so much money on a $1,400 trade. These are kind of like the trade sequences that I've been utilizing today and yesterday, just so I can share these with people. As a percentage, it gives people an idea. Hey, I can manage with up to a 10% loss if the loss is only 140 bucks, right? Whatever it might be. Some people will just play the game of liquidation. I'm willing to play the game. However, I only want to play it if I limit my position size such that if my whole position gets liquidated on a 10x leverage trade, which just happens to be the amount that I've been utilizing to play this game, then I wouldn't be in dire straits or anything of that nature. And so I think that is important, right? It's important for people to evaluate the absolute value of their position size. So I wanted to open this up because this is one that I'm kind of using as an example of riding it into the negative, right? And hopefully it'll serve as an example of one that can yield an ultimately positive result. We have yet to see, what happens here, but hopefully it'll serve as an example of something that can yield a positive result, even though there was a moment in time where I was up to 10% of the position upside down, right? I was 10% of the position in the negative. Now, why did I leave it open? Because I'm personally comfortable with the data that I'm looking at. I didn't take profits on a trade that I made earlier. I was doing the same thing, just kind of sharing some demo work with you guys. And so I kind of I visited that trade and I'm thinking, had the opportunity where somebody watching this at least should kind of know they could have taken profits at, in the case of that trade, about 230 bucks, right? It was kind of like the high of that trade. A person could have, absolutely taken profits in that range. I chose not to, and that was just kind of a personal decision. And here we are with this trade, and it's kind of the same thing. I'm upside down on this trade. That time I could have taken 230. I ended up losing about 36. Here's another example. These are manual trades. These are not set it and forget it with asymmetry. This is me looking at a chart and then looking at the screen that you see, which is my trade, and then me saying, okay, I feel like there's a good chance we go down from here, and I wouldn't want to be that guy that sold at a negative 100. I would rather be that guy that sells at a positive 200, right? 300, whatever the case is. We'll see what we can milk out of it if we get to that point. But I think it's fun to open up videos that I'm in the red. I've had a few great trades today, but I want to share the experience of being in the red as a percentage, right? Because 80 bucks maybe doesn't mean a whole lot to a lot of people. Maybe it does, I don't know. But the experience of being wrong to the tune of 10% when it came to your timing, I think is valuable. And then two, maybe, if we get to watch this to fruition, I don't have an appointment later today. I did just record a loom for a gentleman that I'm helping out. But I don't have any appointments, so now I can manually supervise this one, which is why I didn't have a stop loss set at 36 bucks. Instead, I'm just watching, and I would exit if I felt like this was deviating from my thesis I would exit, right? That's the point I made in the previous video. So this one is not deviating from my thesis just yet. I think all in all, it could prove to be a trade that I'm happy to be a part of. We perhaps will get to watch that this time. And I think that would be a really cool set for the day, because I got to show a failed trade. I got to talk about psychology a lot. We got to go into profit, 235 bucks. And then we saw it got blown out. We saw the aftermath. I paused it, and we revisited it later, and we kind of got to see like what that trade looked like when it got blown out, and I lost my 37 bucks. Here, I could, like I said, need to bail out, and that's fine if that happens. But I think there's a really good chance that that this one gives me, what I want. People that run the market, for lack of a better way of saying it, right? Market makers, people with deep pockets, they're in the business of instilling fear in people such that they bail out of trades when they think that it makes sense, right? And there's a lot of money to be made in stop losses and stop loss hunting and so forth and so on. And so if you have enough data such that you have a strong thesis for what you believe is going to happen with price action that you can follow, even if it means being in the red for a while, to some degree, whatever, even if it means some discomfort in the short term, may very well be worth it in the long term. So I'm not sure where I was when I opened this video. I know I got to like a high of probably negative $150. But I think it would be really cool to have you guys, whoever's watching this, go through an entire sequence, right? From this is me fearful, this is me at negative 150, still believing in my thesis, potentially, to the opposite, right? To the side of the trade where this is me happy, this is me feeling comfortable, confident, this is me in the green. And if it expands heavily into my version of the green, which means if Solana drops in price, I don't know why I happen to be trading Solana today, I just happen to be. But if this drops in price to the degree that I become happy because in my world I'm now profitable with expansion, then that's great too. So I just wanted to kind of open this video up while I was kind of, at least in the scope of this trade sequence, deep in the red, right? At about a negative 10%, give or take, 140 bucks into the red. And then I want to kind of, show hopefully the decline of the red, right? Going from negative 140, hopefully down into the positives. And hopefully I get to show, what it looks like to shift into profitability. And we kind of walk through what that looks like. I may need to time lapse this because I do need to send something off to a person that I'm working with. But if I do, that's okay. We'll just pick right up where I left off. It'll save you the time of having to watch the whole thing. And we will see if this trade makes it to fruition, right? To where it goes down to my target. In a perfect world, my target would be somewhere in the neighborhood of the 160s range. And that may sound crazy because we're at 182 and people have gotten used to $207 Solana and a low of 170 Solana. But yes, in a perfect world, this trade, would be ridden all the way down to the 160s for sure range, and it would end many hours from now, probably in the vicinity of 7 o'clock in the evening. So we'll see if I can make that come to fruition. You are watching it live. It is 1936 UTC time, which is not really accurate for me. We're going to go to Chicago time. And so, as you can see, it is 2:36 Chicago time. And yes, I'm saying that I would be looking, if I were successful, ultimately successful, I would ideally be looking for this trade to get into somewhere in the low 160s, somewhere around 6, 7, 8 o'clock this evening. So I'm not in a rush. I think if I get to a certain point, I would put a stop loss on this. For now, I am the stop loss. I happen to be around my computer. I know, where my thesis would go wrong, where it would be invalidated if certain channels start shifting, if certain things happen, if my absolute value on stop loss number gets close, rest assured my finger would be on the trigger and I would just, unfortunately, have to make a market sell. And I would sell it very similar to if I had a stop loss on it. But for right now, the way I see it, we very well could be in one of my standard deviation +3 zones in a red volatility cloud, and that is a great place to get in an epic short. Wish this would be an epic short if that were to happen. In fact, we can kind of see what that would look like. So in that scenario, let's go ahead and we'll take profit, right? We will take profit at 163-ish, and that would be about 100% gain. I may, if we actually make it that far, and that's a big if, but if we did, I would probably shift it around a little bit. I would look to be as close to the line as possible. I would base it off of what's happening at that time, but it could go, even lower. And so if I gave it like the ultimate low, give or take, for this trade, it would probably be about a $1,600 gain, which is about 117%. And that would be, again, relative to the performance of this trade sequence, what I would consider epic. And so as you can see, it would actually be very well worth it to risk $200 in an effort to earn $1,600. That is an 8-to-1 risk-reward ratio. And so that's the game you have to play. I can't get concerned over losing $50 or losing $150 or just being upside down, which is not even a loss. And so until we exceed that $200 figure, I don't really have to worry about a whole lot. And there is a certain point in time where it would need to deviate from my channel significantly for me to lose. And so at that point in time, I'd probably go ahead and set an automated stop loss. And I probably do that also once I walk away from the computer. That's the benefit of a stop loss. That's why I had to set a stop loss earlier. And the reality was it allowed me the convenience of walking away from the computer. Another smart way to handle that is just simply use low leverage. 10x leverage is a lot of leverage. There's no need to use that much leverage. You can always use more capital with less leverage, or just use less leverage in general, not needing to get 100% gain as your target. Maybe looking for something more conservative, like a 30% gain, right? If you do that many days throughout the month, you'll have a great experience. So anyway, this is video 2 for today, and I'm building it because I would like for people to have one example where we got to experience getting stopped out, and then I'd like to, in a perfect world, create an experience where you guys get to see what it's like to be upside down $130 with a goal of somewhere in the vicinity of $1,600, or even if it ended up being $1,400, I'd probably take profits, right? Just depends on what time in the evening it is. I have my son, and I think life is more important than trading, especially demo trading. But I think it's a great example for people who are curious about the space of capital multiplication, psychology of fear, psychology of greed, and what it's like to play the game. So appreciate you guys, and I'm gonna pause this, and I will continue with the time lapse as we get there. All right. So again, 182 is the current price of Solana, speculating on a drop into the 160s or as low as the 160s. We'll play it by ear. All right, just checking in. Not really sure, to be honest, when I opened this trade. Was a little bit earlier, maybe about an hour or hour and a half ago. Well, there's the chart, right? I guess based on my entry, it looks like it was maybe going on 2 hours ago, hour and a half, 2 hours ago. So we are up on this one. So this is a great case study so far for the bullish side of things. A trade that's working out well. We had one that retraced and went against me earlier, lost 36 bucks. So far on the journey to our potential take profit zone, I say that loosely, right? Very much a potential take profit zone. I was looking at the charts. I think I just want to be a little conservative. If I get this right at all, somewhere in the neighborhood of 161, I think, and I'd have to again adjust when we get to that point. But if I cleared 107% on this, I think I'd be happy. And so I think that would be a case study, well documented, and I think it would just add further evidence that technical analysis is real. Asymmetry is real, right? The one that I lost earlier, I lost 36 bucks. I could have even played more conservatively and taken profits at 200 bucks. Some people would do that. I was going for, honestly, this move. I was just going for it a bit early, and I was willing to risk 37, 38 bucks, whatever it was, in an effort to, to get the larger amount. So here I am again, and identified a great entry again. It has to be a very precise entry all in all when you're entering at a 10x, right? Because if the price action goes against you, even in a small way, you get stopped out, right? Or as we were talking about, you have to be willing to look at some numbers that are like negative 15%. Numbers that we don't want to look at as humans, right? We don't want to see our whatever, right? In this case, it's 1391 position. It's not a big position. If you had a larger position, you wouldn't want to see that retrace to the tune of negative 10, 20, 30%. So we set stop losses, whether real or whether manual. We set thresholds where we would simply sell if our thesis was invalidated to that degree. In this case, looking pretty good, and continuing to watch the squeeze, which is always cool. And so I am going to now, let me see if I can make it a part of this for you guys. Just kind of in the middle, of the video documentation, right? Let me see. Give me 1 second here. I know everybody might be on the edge of their seat. Just kidding, being sarcastic here. But I know everybody might be wondering, like, what's this dude doing? How is he determining whether he should be in a trade, not be in a trade, whatever? Let me actually show you one of the charts that I decided to use when determining this move, right? And just kind of, again, it's all about the person who has the greatest perspective. So I'm going to show you guys a couple things. All right, so this one, let me bring it over, see if I can match it. Oh man, that was really close. All right, so matching it up, right? So I want you to see the channel break that I saw. Now, you could look at any number of potential channels and any number of time frames, and I think it takes a lot of experience and skill and practice and loss and failure and some successes to begin to determine, which ones you want to take a chance on, right? Which ones are worth the risk, and what do the other time frames look like such that I might be willing to take the risk, right? So I entered right around the breach up here, and conditions were conducive from what I could tell. I am riding Bitcoin's down pressure right now, right? It's not even dumping. When it dumps, Solana dumps harder. A lot of correlated alts dump harder, right? So I just want to show you guys the channel that I saw and that I'm kind of using. This right here was just a quick reference for me. It turns out you can use this text box for your own notes, right? So when I wanted to know what is a linear regression channel using the 10-minute time frame, what is that? How long of a trend am I actually utilizing? And so the answer was approximately 33 hours, right? A 5-minute trend at 200 units is 16 hours. So you're kind of getting an idea for what kind of channel, if any, has been created and or respected over the course of that time frame. So in this case, the time frame has been for a 10-minute channel was 33 hours. So for a 15-minute channel, I believe you just have to add another 16 hours, right? So make that 49 hours, almost 50 hours. So that is a rough idea of what I'm looking at in that regard. So I wanted to share that with you guys. We're watching the price kind of expand. I'm not going to sit here on this video, not without a time lapse. I'm not going to sit here on this video all the way through to see what happens with this trade. But I am going to show you guys the confluence monitor, which for those of you in MSAs, you might be curious as to what is he talking about when he references this mythical confluence monitor that he speaks of, right? So I want to give you guys an idea. I'm going to try to declutter it a little. Let me remove this line that doesn't really matter anymore. It's kind of irrelevant. And I'll kind of give you an idea of what it looks like when I play with it, right? I don't think, actually, I'm going to leave pressure lines because you can see that is the reason for my target. So really quickly, one time frame, just literally one time frame. Let me move my head. I don't know where it shows up on everybody's screen, but this is the confluence monitor that comes with DIIO, right? Our ability to utilize this data differs greatly, right? But I think the more people train on this, the more they seek to understand this, the better. And so I want to simply show what the trend sniper that I look at looks like. Actually, that's a very, very thick white line. I'm going to decrease the thickness there. This is the specific box that I utilize, that I like to look at for trend, what I call trend sniper. So all of these other data points can flicker a bit more. However, when I go to enter into short-term trades in time frames as small as the 30-second, if I can get the 30-second to line up with the 2-minute and the 1-minute and the 3-minute, crazy things like that, specifically for my entries, then I do it. And I utilize this trend sniper data right here. All in all, the box that I pay the most attention to is zone, right? I also pay attention to the live trend, so I want to know where it's at, specifically zone being the most important. And then I want to know, the macro trend, where is it at, right? It's currently bearish. When it's pending bearish, that means it's still ongoing. When it says last candle bearish, that means it happened already. It may change, right? So we have to be cautious of that. Pending is always current candle looks like this. If it says previous candle, that means the last candle looked like that. This one may be different, right? And if you happen to have the good fortune of being in this case, a short, when all of those are red, accompanied by breakout detector being red, accompanied by confluence sniper being in the bearish zone, being full red, being strong bearish, current bear zone, accompanied by sensitive zone momentum in the bear zone, also bearish, then generally speaking, you're in a really good place. The more of this box that's red and in bearish zones, and I'm speaking in the most layman way possible, right? Like even for me to understand this, the more red it is, the more bearish it is, the more safe you can kind of feel being in a short, specifically when larger time frames are turning in this direction, right? So we want to see like what's going on in larger time frames and how much can we trust this bearish energy, right? We see here 45-minute channel. It's a little, if I have something that I need to be cautious of, it would be a 45-minute channel. However, if we're utilizing the data properly, I can also see this is where the channel once was. This is where the channel once was. So this channel is not being respected. It is breaking down. It is at a minimum weakening. And the basis for my thesis is that it will weaken to the extent that maybe it allows for my take profit right around this pressure line. Now notice I'm in a trade and there are no pressure lines in sight, right? Which means technically in a period of downward high volatility, even if it's a wick, I could see price action go down and bump against this line, right? That is the benefit of having the data and setting my take profit zone around the data. If I see this channel get disrespected to the downside, that strengthens my thesis for downside movement. So having a relatively good sized time frame that's evaluating 45-minute candles being this short, saying, okay, last candle you were supposed to short. It happened just last candle. Confluence sniper being full bearish, bearish energy, bearish zone, strong bearish confluence, having confluence detector and momentum fully red. If you've watched the video on this particular algo, then you probably have a heightened understanding of what this does. Having pending bearish breakout detected on the breakout detector, which was the basis for the allowance and creation of the breakout candles, right? These blue candles for the breakout bars, these orange candles for the breakout bars to the upside, all of that. And then seeing that money flow technically in the 45-minute time frame might still be considered consolidation, but being in a short, I love the fact that this is bearish, bear zone, bearish, bearish. My macro momentum is pending bearish, overall signal bearish, macro trend pending bearish. All of these are beautiful things. Now you ask, what is this green? Should I be worried about this green? No, because it's in a trending zone, which just simply means this trend is still pushing in the same direction, right? So what direction is that? Well, we look at the trend confluence and it's clearly dominated by down pressure. We look at trend and power, which is just an uncorrelated trend metric. It's pending bearish also. The only reason this is green, we have to pay attention, is it's trending, which means the trend itself has got the green light, right? It's kind of a way to look at it. It does not infer any kind of bullish activity. If we look at slow here, actually I have just a couple bugs, probably like one or two bugs on this particular algo that I would want to change. This is green because it's bullish, so I'm supposed to draw your attention to it. But if I had to go in and fix it, I would say it should be yellow because we are in the bearish zone. So at best, it's yellow to call your attention to it. it should not be misconstrued as being green, right? Other than that, I really like the color configurations. There might be one that I would change here. So it is important if you're in a trade where you're deep in the money, it's useful to read the text, right? Just on those particular items or anywhere there's like a bit of deviation from your trade, you might want to take a look at those just to make sure that there's nothing going against you. But this much red is great. And then I want to kind of show a little bit more, right? If I look at larger time frames, and this is the basis for a short to go as deep as I'm gunning for, right? I could pull profits early, right? We don't want to just give money away. But the reason for the basis that it could go into the 160s, and so far has done a pretty darn good job of it, is the fact that even time frames like the 2 hour are displaying what they're displaying, right? Great for shorts. And I'm going to walk you guys through a little bit of this confluence monitor while it's happening. Volatility, currently in the bear zone. Bearish volatility is probable. There's a huge difference between probable and possible. Probable is good if you're in a short. Possible, could be a 1 in 100 possibility. So be cautious of anything you enter where somebody utilizes the word possible versus probable in an attempt to manipulate you. Both of these look really good. Great for being in a short already that's deep in the money on this particular time frame. I like it. Overall bearish confluence. Got to be careful for triggers. Consider a long. It knows that we've been in a state of like continuous down pressure, and so it's telling you go look and just make sure that there's no reason to be in a long. Make sure that you're looking at all the different things you need to look at, and just be cautious that we could be considered overextended. So whether it's consider a long, whether it's maybe you should take profits, you just mind the triggers because they're decent at giving you insight, right? But when I see this much bearish red on the 2 hour time frame, I feel pretty good about being in the position I'm in. I do look at the Bitcoin chart. I'm looking at it as we speak. 4 hours pretty bearish. In fact, it's cyan. Movement monitors on the 6 hour, 4 hour, 2 hour are all blue, and we are just below a breakout bar. So we have a really nice probability and potential for bearish price action in Bitcoin. I also looked at, I believe, the 2-day time frame, and the 2-day time frame was at a minimum flashing cyan. I believe the 1 day is also displaying dark blue with the volatility cloud breached. So, as I mentioned at the beginning of the video, I always ask, is Bitcoin total market cap, total 3, are they supporting the success and or failure of whatever I'm about to do? In today's move, both times, even the time I lost 38 bucks, I was looking for shorts because they would be supporting my success in the case of shorts, right? I want to go with Bitcoin's energy, not against it. So again, the 1 day being dark blue and the 2 day being cyan, great for me. The 4 hour being dark blue, the 6 hour being cyan, the 12 hour being cyan. All of these things overall great for me. Bitcoin, even looking at the 5 minute, could see a bit more of a dump, which will put heavy pressure on Solana to move toward my take profit. I want you all, especially in MSAs, for you guys that are subscribing members, to see just how important this data is. As we look over here, we see confluence looking pretty good. Sensitive is strong bearish. Smoothed, strong bearish. Signal, gotta be cautious. Strong bullish, which is why it's yellow. There's conflicting data. Zones, which take longer to shift than confluence itself, all clear red, right? I love that. Sensitive, possible transition bear. Smooth, possible transition bear. Signal, transition zone bearish. That means we could be in a place where we're seeing a significant shift to bearish, which means actually if we shift into the bearish zone fully, that we have more room for downside, which is a perfect set of conditions for me to touch my orange breakout, my orange pressure line, right? What is a pressure line? Why is it there? Part of the DIIO algo systems universe, right? Okay, so that's that. I'm touching a lot on the confluence monitor today, but we see pending strong bearish. We see a lot of dominating pressure bearish. It's a great moment to be in a short. We see Solana pressing. You're not looking at the Bitcoin chart like I am right now, but Bitcoin in the sub 1 hour time frames is starting to turn cyan, starting to get bearish. So our short is expanding as we speak, which is pretty cool. Always cool when things go your way. Not so cool when things don't go your way. We're always mindful of channels, right? This is a significant channel. It's a 2 hour, but in all likelihood, even a 2 hour channel is not going to hold a lot of weight against a dumping Bitcoin, right? That is the one thing that will cause Sol to push all the way to an extended place, right? Such as these low 160s zones, which I had mentioned early on, back when we were way up here, wherever it was our entry was. I do like to mark my entries, so when I'm in a trade, I'll generally go to Bybit or whatever it is. I'll mark the trade with a horizontal line so I can see right where it is at a quick glance. I'll do that on Bybit. I'll also do that on my trading view. I will sync across the whole layout. Sometimes I'll sync it globally. I will sync my asymmetry calculations globally too, so I can see what I was looking at. I can see it in a number of different time frames with a number of different perspectives, right? So that's valuable to me. And then I'm going to show you one slightly larger, like the 4 hour. Why is a short a good place to be? Why would it have maybe been a consideration based on the 4 hour time frame? Let's take a look. Okay, move my little head there. I'm looking at one screen and my camera is this other screen, so forgive me if I'm not looking straight at the camera. As you can see, I love where we are on a 4 hour channel because we have room to dump all the way to 145 technically. But I want everyone to see what's going on here. Confluence sniper, got to be a little cautious. Why is this green? I'm not sure. I'm a little cautious here. Confluence overall is bullish, but we are in the bear zone, and that's what I'll pay attention to. Also, the blue, right? If you're in DIIO, you know what this is. The blue breakout bars, blue movement monitor, red volatility cloud. Generally a great set of conditions for a short. Now the 4 hour is a channel that's really well respected a lot of times. So more than anything, for somebody that's in a short, I would love to see it fall through that, right? So I have some trades going on in addition to this particular trade that I have going on for you guys. But this was very important to me because this can influence the believability of technical analysis across a number of people, right? If I can show people live or in a video what's happening, why it's happening, the thesis for the logic that we've created to enter into trades that we have, regardless of the absolute value numbers, right? Then I can bring more people into our ecosystem because as per Ray Dalio's version of believability, they're seeing it happen right before their eyes and they're seeing the logic behind it. I'm not just some weird guy on YouTube drawing all kinds of lines that don't make any sense with a bunch of, hope and just, I don't know, difficulty behind them, right? So with that being said, very, very cool that even in this 4 hour time frame, we are in the bearish zone and we're bearish. The live trend is actually bearish in the transition zone. So overall, we're in a great place to take advantage of some down pressure. The only thing that's a little concerning would probably be the energy, I would say. going into the bullish zone even a little bit, but there's so much bearish confluence that I'm not too worried about it. And then the fact that we're in the bearish zone, I feel comfortable. The text, I think, actually says more than the colors. The colors are just about perfect. They're exactly how I want them, with a very, very few exceptions. But anytime I see green and I'm challenging my thesis, I'm challenging my own thesis, my goal is generally to ask myself, is this cool? Yeah, I like it that we're in the bearish zone. Okay, I'm comfortable with that. So even though I see this green, the bearish zone makes me feel comfortable. And if I'm looking at Trend Sniper again on the 4 hour, this makes me feel comfortable. If I'm looking at overall short-term money flow, I'm happy with strong bear. If I'm looking at breakout detector, I'm happy right now being in a short on the 4 hour with pending bearish breakout detected. It's kind of already happening, but when you see that, sorry, my pen was not supposed to be going. But when you see that and it's pending as we speak, it's also a good thing, right? It's good to be in a short at that moment in time. And so if somebody's questioning, how do I know when to get out? When should I consider getting out? They can look at something, and now I'm going to get really sensitive on you, but they can look at something like the 5 minute, right? And just ask themselves, has the volatility cloud been breached? Whether it's the 5 or whatever it is. If they're sensitive about taking profits, if they want the whatever we're at, they want the 47%, $655, and they're okay taking that. This is the kind of data that person might look at, and then they might say, okay, you know what, I've made enough for today. 47% in one day is great by anyone's standards. I'm going to take it. If they have a conviction-based trade, they could move their stop loss down at a moment like this and put their take profit wherever they believe it to be. You could even set up staggered take profit zones. So I take some profit here. If it goes a little further, I take profit there. If it goes a little further, I take profit there. Meanwhile, if it retraces to a certain extent, I get out of the trade completely, right? Like, how safe do you want to be? How greedy do you want to be? How conservative do you want to be? And there's no wrong answers in trading. Everything is fair game. It's just, what is your strategy? What is your ultimate outcome that you're seeking? Okay, and then the last thing, which we had already kind of touched on, is zone, right? So I look for a zone change in smaller time frames. I use this to find entries, and I use this to find exits sometimes, depending on my trade. I can tell that the macro trend we're in is pending bearish, which is great. I have no reason to get out of my short based on this time frame. The live trend, it's bullish, so we're obviously encountering a little bit of support, right? And as we can see in the 5 minute time frame, we're encountering a little bit of support. It flipped. Bearish zone, pending bearish, and bearish zone. So this is a trend sniper configuration that I love to see if I'm in a short. If I can see this same exact configuration in 5 minute all the way up to the 4 hour, and I'm in a short already, I'm a happy camper. If for whatever reason I'm in a very sensitive, highly leveraged trade, I want to just simply show how intense we can get with sensitivity. The 30 second is about the craziest I get, right? So the 30 second, if you're in a highly leveraged trade and you're looking for extreme sensitivity that statistically, again, not with perfection, but statistically will keep you in a nice place, right, where you don't leave money on the table and at the same time you don't give money away unnecessarily, then watch for a trend sniper configuration change in a tiny time frame like the 30 second, because it is keeping track of the trend in the 30-second time frame. I can't tell you how valuable it is to have real-time data crunching of trend that works as amazingly as this one does in the 30-second time frame, right? I literally time entries and exits off of some of these 5-minute and sub 5-minute trend sniper data configurations, specifically when they're all kind of lining up to say the same thing. A bunch of transition bearish, a bunch of macro trend pending bearish, right? I'm only using the sub 5-minute data for an entry, or maybe in the case of exiting, an exit, right? If I'm in a highly sensitive trade, or even if I'm not in that sensitive of a trade, I might use, hey, when the 3-minute trend starts to change or the 5-minute trend starts to change, that can lead to a significant reversal, even if temporary, that would push your position into the direction that you don't want it to go in. And so you might decide, I'm just not going to fight that battle. I'm going to get out when the macro trend on the trend sniper starts to go against me. When I start to see, a zone change against my position, I'm going to get out. So I pay a lot of attention to that. And it's crazy, but you see, regardless of all the changes we're seeing in different time frames, even in the 30-second, this has stayed continuous. But I just wanted to kind of show how sensitive you can get with the data. It makes it, I think, almost easy, again, depending on your skill level, it makes it much easier to trade low leverage with this type of data. If you trade high leverage, it's going to be tough, right? Like, you better get good at it. I don't recommend high leverage. I recommend following the belt level dojo system that we've created, where you start at a white belt, and if you earn it, and it's the honor system, it's your own money, you stand to lose. But if you earn it, you move on up to as high as black belt. Generally speaking, I tell people up to 10x is potentially, for a good trader, responsible use of leverage. Once you get to 10x to 25x, you have to be cautious. You're in the tuition zone. You're going to pay some tuition. You're going to learn a lot of lessons. And as I always say, much like an Ivy League education, you stand to pay a lot of money for that education. And then lastly is the donation zone. Anything 25x or above, you could win, right? And that may propel your confidence further, but you could also lose. And more often than not, people lose than win when they're in the donation zone, right? That 25x to 50x leverage or to 100x leverage. So if you play in the donation zone, usually a best practice for that is to keep your absolute value of your position size low, right? Low per your own standards. Because if you lose it, hey, you risk mitigated by keeping that position relatively low. So if and when you lost all of it, you didn't get wrecked. And that's a big deal. Okay. And so that's it, guys. That's the middle of this video. I am going to time lapse it. You can see we're bullish on the live trend. Just literally the live trend itself. So it's kind of like I have potential to go up, but we have a lot of still bearish data, and this is literally the 2-minute time frame. This will, on average, go bullish, quite often, even in a larger downtrend. But when you have the 1 hour and the 2 hour and the 30-minute, and all these much larger time frames, the 2-minute is only for the most sensitive trades where people are using high leverage and they want to take money off the table. Otherwise, you want to pay attention to actual zone, which is much more important than the micro data, right, which says bullish. And then it says it is in the bearish zone. It wants to let you know. So even though there's a little bit of bullishness to it, it's in the bearish zone. Pay attention to zones if you use this. It is in the 2+ hour Confluence Monitor educational video. And then lastly, we have the macro trend, again, relative to just the 2-minute. But for highly leveraged trades, people who are sensitive to risk, it's a great way to identify a shift in energy in this small, super sensitive time frame that in a lot of cases will allow somebody to get out before the trade goes against them too much. Or you can time your entries with this sub 5-minute data. But you want to time your entries and exits and consider that information relative to the much larger data that we utilize on our micro and midterm charts, right? Micro meaning sub 1 day, but a lot of the hourly stuff, right? The 4 hour, the 6 hour, the 12 hour, the 2 hour, that matters. You don't want to use the 2 minute time frame and go into a long when all of those time frames are bearish, right? You want to look for shorts. And you would use the trend sniper to find potential entries on your shorts while also utilizing volatility clouds, channels, multiple time frames, and other logics that you find using the algos, using your experience, even using simple moving averages, if that's your thing, right? Even using traditional indicators that you feel comfortable with, if that's your thing. I always kind of mention, like, some people are into Ichimoku clouds. Allow this stuff to tie into that. I don't use that stuff anymore because I think this is better. It's more sensitive. It's easier for me to read and understand at a glance, but some people like it, right? So I don't want to take that away from anybody. So again, we're in the 2 minute, and if I look at, what this has been doing, overall, we've stayed in the bearish zone. I have no need to worry about getting out. Now, I'm so deep in the money that I don't know that I would even pay attention to the 2 minute at this point, because there's so much bearish confluence from Bitcoin and from other time frames relative to even the Solana trade I'm in. But I want people to understand just how sensitive they can get, should they choose to, should they be in, and again, I don't recommend it, but should you be in a more highly leveraged trade and you need access to that sensitive data, this is definitely helpful. So that is the trend sniper. I do have, like I said, a 2+ hour video that goes through each box of this system. And so I want you guys in MSAs, guys that are subscribed members, to be aware of that. So meanwhile, the time lapse on this particular trade is currently at 50%. This next break that we would be seeking is a significant one, because as you can see, even if you're just kind of like your average crypto person, you would say, hey, we haven't had a breach of this support in quite a while, right? In fact, the last time we breached it was on our way up, right? So this could be a great take profit zone. If you believe it's going to go lower, you would keep it open. And so I'm going to evaluate, but we're at positive $700 right now. I see deep blue on the 4 hour for Bitcoin. I see, high chance of Bitcoin falling further. And so just at present, and our thesis is always subject to change, but at present, I believe that there's a lot of opportunity for Sol to move toward my take profit zone. And actually, we're halfway there, right? If you've watched these videos in their entirety, you saw me open this when we were in the red, right? So how much conviction did I have to have in the data to start a video in the red saying Sol is going to drop from 181 or 182 and some change, wherever it was, to the 160s, right? I promise I'm not just an insane person saying things. I'm just looking at data and giving myself some statistical probability for what could happen, what is likely to happen, where we might encounter resistance, where I may consider taking profits, and what kind of changes I would need to see in the trend sniper in certain time frames for me to feel like I need to abandon this trade sequence and just take profits, which 48%, is not a bad place to be. And so I do this with maybe a number of different trades in a day, but I normally don't open too many because it's a lot to keep track of, and depending on the day, I may or may not have time to do all that. But I do want people to see, for anybody who says you can make 8% in a single day is crazy and they're not good at it and they're charlatans or whatever nonsense people might say. Here's the evidence that they're wrong. I don't know what else to say. So I do this every day. People in our group do it every day. I made a video just before this one where I had a loss. I was in about the same margin position, about $1,400, and my loss was $36. Now, this is a great opportunity for me to showcase what happens when you're successful and you land one, right? If it's 1 out of 2, it's really good. Profit stands to be 107% as my target, right? Even as it stands right now, my take profit would be 51% if I took it right now. I could move my stop loss and I could make sure that at a minimum I walk away with $500, right? Which is whatever it is, 35%. I'm not sure what the math is, but I could also, just continue to monitor and continue to formulate my thesis that if Bitcoin drops 160s, low 160s, mid 160s is 100% possible. And at this moment in time, looking relatively probable for Sol, right? So again, great example of asymmetry. For a more conservative player, they could take profit if they felt 51% met their needs, met their goal. Pretty awesome to be able to make 51% on any amount of capital that you feel comfortable putting into the crypto space in one day. Could you lose? Yes. Will you lose, especially if you're new? Yes, a lot, probably. But learning the skill of capital multiplication is extremely well worth it, in my opinion. I can't emphasize enough that I am doing this as an exhibition trade with $1,391. I did the same thing yesterday. Today I'm just kind of filming a couple versions of it. I'm doing it with margin that I think is comfortable and palatable for most players, right? Most enthusiasts, just to, hey, I can wrap my head around 1391. I can't imagine putting 10,000 into this, type of thing. But I want people to know that there are people with risk tolerances and relationships with money that might want to put 10 times this margin position in. They may have $14,000 into their position. So yes, do they have more to risk? Yes. Will they experience larger potential drawdowns if price goes against them? Yes. However, their unrealized P&L as we speak, if the position was 10 times the size that it actually is, would be $7,000 in about 3 hours. So I want people to know it's also possible for you to put $14,000 down, risk 10% of it, right? $1,500 in an effort to earn, as we speak, you'd have $7,000 in your account. If it continues toward my take profit zone and it lands there, as much as double your money, $15,000, all occurring in the span of a day, according to my thesis, right? If it happened the way that I explained it earlier, according to that channel, it would be $15,000 gain off of $15,000 in organic capital, $1,500 at risk of loss, which is 10% of that position, and you could make $15,000 as that target within approximately a 6-hour time frame. And it is all up to you, your risk tolerance, your relationship with money, and what a $1,500 loss or a $15,000 gain happening in 7 hours would actually mean to you. To some people, it wouldn't mean that much. To other people, it would ruin their, ruin their whole experience, and they would get out of crypto. Those people should not be playing with that position size. So that's what I wanted to share with you guys. I'm going to time lapse this. If I happen to get out of it, I will record it. But otherwise, it's just an educational lesson. And if it happens to make it to my target of approximately $1,500, which is 107% gain in one day, I think my target time frame was by 9 p.m. this evening, then that's great too. I'll film the win, and that'll be fun for people as well. Either way, you got a little exposure to the Trend Sniper, the Confluence Monitor, a trade, expansion of a trade, some trading psychology, and the other side of the trade that I posted earlier, which was a loss of $37. This one, as you can see, is flirting with, so far, a $660 gain. And again, we'll see if I decide to take profits somewhere in here, or I decide to stick to my thesis and maybe just kind of risk mitigate by pulling a stop loss down, ensuring that no matter what happens, I net $500 and I live to make another trade, $500 wealthier, right? And so that's the game. So I hope you guys enjoy it, and I will continue to time lapse this video. We'll see what happens. Okay, I just wanted to unpause it here for a moment. Happened to be in the area, and I just wanted to kind of show, generally speaking, a simple way that I look at this, because bounces and things of that nature, a lot of times are just like, they happen because a bunch of other people see what I see. And so in this case, we see that there's kind of like a local, if you're looking at the 30-minute time frame, bottom right here, right? So we know there's a high likelihood to see some people come in and say, hey, this is a genius place to long. They're probably not looking at energies in the 4-hour. They're not looking at breakout bars. They're not looking like at sophisticated algos. They're looking at, you know, what some guy on YouTube told them to look at, which is fine, right? That's generally how a lot of people learn to trade. And sometimes it works, sometimes it doesn't. It's probably a 50-50 shot that you could long here and make some quick money. However, if you're looking at sophisticated algorithms and you're looking at energies and trends and, you know, all these different types of things that are, again, just simply more sophisticated than what will show up on, you know, your general YouTube education, then you know this is a rough place to short. It's a rough place to short based on Bitcoin's current situation, right? Is Bitcoin pushing? Because it seems like we're pushing. Yeah, so Bitcoin's pushing. It's deep blue in the 24-minute. It's flashing cyan in the 45-minute. Red volatility clouds across the board on the micro. And deep blue on the 4-hour, which is bearish retesting a pressure line, right? Most people don't have pressure lines. They don't have breakout bars. They have no idea where the volatility clouds are. So of course they would long right there. I'm watching it. It looks like, you know, case in point, somebody that longed, especially high leverage there, is already in danger. If you watch what's happening, they're already in danger, right? They're freaking out because they tried to long there. So if you long without a stop loss or you blindly long, this is the risk you are taking. If you happen to be wrong and energies are so bearish that they just push right through your stop, or if you're one of those people that plays without a stop, then, you know, you're in trouble. But it's already failed, right? That the thesis, and here's the thing, the thesis for that to be the low already failed. So you could have had a minuscule stop loss there, and you could have not had to spend much money to find out if you were right or if you were wrong. And you could have already, you know, figured out whether or not that was going to be successful. So it's already not successful, right? I'm just going to kind of make a point while we're watching this occur. And the thing that I wanted to look for was deviation. Now, yes, we could argue that maybe, you know, it bounces for a little bit, but going to the checklist and the question of, is this trade worth it? How big of a bounce, if I'm in DIIO, how big of a bounce do I expect to see given the data that I have, right? Blue breakout bars across the board with Solana, trend snipers that are red across the board, Bitcoin that's bearish, blue and under red volatility clouds across the board, blue movement monitors everywhere, indicating that trend, volume, money flow, all these things are not in a good place. So if you have that degree of data, you'd ask yourself, you know, how much of a bounce would I look for? And if it's something like this, then, you know, the risk reward is 3, right? 1 part risk for 3 reward, you know, for 3 parts reward. Maybe it's less. I don't know. I don't know what it would be. But when you get to checklist 3 and you ask yourself, are the numbers worth it? Is this trade worth it? Is the risk worth it? Am I going against blue movement monitors everywhere? Which in this case you are. It's just not worth it. Even if this somehow proved to be successful, it wouldn't be worth it. So I just want to point out that that is how blindly a lot of people go into trading. Those are the people whose money we are probably taking, you know, and I don't want to be the bad guy, but we have to acknowledge that money comes from the opposing side. Some of them are more sophisticated than others, and those people lose their money too. And you know what? I've lost my share of money too. So it's just a part of the game. If you choose to play it, you know, the money has to come from somewhere, and it generally just comes from opposing positions. And so every time somebody gets liquidated, there's another party that has an extreme success, right? Some people have many more extreme successes than other people. And so what I wanted to point out here, one, was the potential for a bounce because it happened to be the low over here, you know, at 0.6 this morning or whatever time it was, you know, many hours ago. And then the other side of that was simply this. If we deviate across that line, again, just based on today, not based on longer term supports and resistances, of which surely there are many to consider. But if we deviated just in this short term time frame, then that is no longer a thesis that's valid of that support being meaningful. So could we still see a bit of up pressure show up and somehow, you know, magically give us a little bit of a retrace? Possibly. But the moment that line was breached by even a tiny bit was the moment that I knew this trade had a higher probability of occurring completely with my whole thesis being validated than not, right? And it's, of course, always nice when you don't have to deal with any up pressure, any opposition to your trade direction. So I just wanted to pause for a minute to talk about that sort of thing and why, if you have data, you would never go and long that, even though without data, you might think it's a good idea. And so, hey, 888. So we are, sorry, I have a thing with eights. That's why my Discord name and my Twitter name are Bray888. Well, we'll get into that later. But our goal is to create 8% 3 times a day, a few times a week, and become wealthy. At any rate, as you can see, the trade is expanding because other people probably see what I see, which is the moment that we deviated from that very local intraday low, the thesis was invalidated. And now there's room for people who wanted to go short to go short. And right now, there's FOMO occurring on the short side. So we are literally seeing people push their money into shorts, not wanting to miss out on what they perceive as a great opportunity to catch the soul train downward. The problem is, generally, and it could go all the way, I don't know, but the problem is FOMOing into short pressure at moments like this is probably the way that I've lost the most money in crypto. So I would never do this unless I had overwhelming data that told me it's a good idea. You should do it. You should do it with low leverage. You should wait for it to retrace to a respectable place and then do it, right? Like maybe, I don't know, maybe it's right at the line. But for my purposes, which is this trade specifically, I just wanted to know, are we going to deviate from today's low? And we have. And so now there are other supports that are much larger that I maybe, you know, would look at as wanting to be concerned with. But I mostly wanted to pop on to say this adds a degree of probability for my entire thesis of creating a 107% gain in one day as being probable. Again, not just possible, but it just became even more probable. The earlier in this process that we were, the less probable it was. It was only possible. And as certain things begin to deviate more and more in my favor, as the metrics begin to turn more and more in my favor, and more people start to notice these deviations and join into the trade direction that I'm in, the outcome becomes more probable. And so that's what I wanted to kind of pop in and share. So now I'm going to let this ride. I think that the chances of this trade coming to fruition at least 107% ROI are extremely high. And now you can see, even now, why I am totally fine losing 37 bucks. And that's why I think it was powerful as a part of a 2-video set to include the loss, because I want to highlight that the loss was $37 and the real gain in 1 out of 2 trades using DIIO data and knowing how to use it, being educated on how to use it, created so far almost $1,000, right? That in itself already is 20 parts reward per my 1 unit. I mean, I'm already at a 24 risk reward ratio based on those 2 trades, right? I was willing to lose 40 bucks in order to make 1,000. That's already better than a 20-to-1 risk reward ratio. So for the people out there that don't believe that this can be created with great data accompanied by great psychology, emotional control, and excellent data flow, I just, an education on how to use that data flow, I just want to share this dose of reality so people can see it happening live on the exchange. You can watch my unrealized profit climbing, and then you can watch, I just did this yesterday too, right? So this is not extremely uncommon. And that's the point I hope to make. Yesterday I did it in screenshots. Today I thought, let's ramp this up and do it with video. We'll show some of the Confluence Monitor data so people can kind of see what's going on. And to be able to essentially call your shot from a place that nobody saw it, right, is a pretty amazing thing. And I wouldn't be able to do that if it were not for colors and simple, data metrics that allow me to have data that most people don't have. We are trading against the best people in the world. Some are anonymous, some are institutions. I don't even know who I'm trading against. All I know is I'm a player in this game because I can take their money. And I'm just a guy that plays the game out of his house, but I do have 3 32-inch monitors. I have a very powerful computer that allows me to have an engine that will support all the charts and data flow that I have at the same time. And half the time I'm messing with real estate things while I'm in trades with numbers that are significantly larger than this. This, I feel, is a very palatable experience for most people. I think, what is this? $1,400 is a number that people can wrap their head around. And if nothing else, kind of explaining my thesis from the beginning, showing you a failure, showing you that it does happen, and then showing you a success and showing you, something that I should not have been able to predict if technical analysis wasn't real, coming to fruition and creating an excellent case study for a demo trade. It just lined up perfectly. I shouldn't be able to do this if technical analysis wasn't real. I should not have only lost $36 on my way to gaining $1,500. And I shouldn't be able to do that with significantly larger positions. But yet, here we are. And this is reality as I see it. And this is the gift that I want to bring to other people today. I would say maybe for the first time, I thought it prudent to do some recordings so that people will have an idea of what it's like to lose and how you have to prepare yourself to be willing to lose, as well as what it's like to maybe have a gain and a victory and to be able to take it and then just still live your life and just be happy, right? We did this all day yesterday, had an amazing outcome, and I have the gift of being able to do this any day that I feel like it, right? What's it like to make $500 a day? What's it like to make $1,000 a day, a couple $1,000s a day? If you're a well-funded trader, this is peanuts for you, right? I could easily be in a $10,000 position, willing to risk $1,000 on my way to making, significantly more, right? And that is the fact that I want to pass on to people. It's not about just me showing that I can make $1,000 with this money. This is just what I felt would be, on average, powerful for the median of all users that might watch this video. There are wealthy people that can, use their brains enough to say, wow, I could do that with 10,000. What would it be like to make 74% on 10,000? That's kind of nice. I'm interested, and at the same time, there are people that don't have that kind of money. They don't have $1 million and 10,000 is peanuts for them, right? And so for those people, it's really awesome to say, hey, I have 20 grand in the bank. Could I play with 500 or 1,000 or 2,000? And if I learn to play this, would this be a game that I'd be interested in? And could I maybe make it a little safer by using less leverage and by doing things, slightly less aggressively? And the answer is yes, you could, right? So as long as you can wrap your mind around that, I wanted to have a great example of what it looks like to create a 2x gain in one day. And I love the fact that I had a loss and then a gain. And people can see the asymmetry of 2 trades. I only made 2 trades for the demo account today. One lost 37 bucks, one is on its way to 1,500. And that is the asymmetry that I customarily play with. I look for that asymmetry. It's a part of the Digital Investor IO process. It's in the back end of our website, and that's what I want to share with people. So this went a little longer. This was kind of my midterm discussion because I wanted people to see what goes through my mind when we breach what I would call a significant inflection point or a support. Again, the whole way down to my take profit, there are people jumping in with 20, 30x leverage, hoping that they catch the squeeze downward. When the smarter people, especially as overextended as this could be to the average person, might jump in with 3x leverage, 2x leverage, right? Maybe higher capital. And they're doing a lot better if they have data to accompany their decisions. I would not be able to do this if I didn't have insane amounts of data that allow me to play with professionals. Ray Dalio says to be a good trader, you have to perform at the level of an Olympic athlete. Like, that's how hard it is. I don't know if that's true or not. I guess it is. I'm just here to say that we do it. And that feels awesome to say, but we do it. This is, I think, a bit of evidence that kind of shows you what we do. And again, the video before this shows you that we lose. We're not claiming to be 100% successful. We lose. It's based on your experience, your data flow, your emotional management, your well thought out thesis, and your relationship with money, right? Not everybody's going to be willing to put $1,400 into magical internet money land, or even your Charles Schwab account. A lot of people don't want to trade options with that kind of money because they know how quickly it can leave them. Much less would they want to play with 10,000 or 50,000. But to those people that want to take it to that level, this game exists. And if you catch Sol with a good move or Bitcoin with a good move, you can do the same thing with much, much larger amounts of capital. So I'm here to show people that, kind of give a little bit of illustration, real-time case study. And we'll see if this continues to move toward my original thesis take profit zone, which I'm pretty comfortable with 162. I'll probably leave it there. So I'm going to pause it, let the time lapse continue. I just want to share what's going through my mind, what often goes through my mind as I build this video for you guys. And I hope you enjoy this. This will be in the back end for those of you that are even general DIIO participants that have access to the back end website. Again, you can play this game at this $1,500 level, do really well, I think, overall. $1,000 a day. It's possible, not probable, possible, if you're good, if you have skill, if you take the time to learn the game. And at the same time, $10,000, if I had a $14,000 position right now, as we speak, my gain would be $11,000 so far, right? So I personally have some other larger positions happening as we speak. This is just a great case study for those of you who don't believe that it's possible, and maybe you're just tired of seeing Bybit screenshots that may or may not be real, right? Like, maybe we Photoshop the shit out of everything all the time. But hopefully you can see that this is just happening right before your eyes. And you can check the charts later. The time is 5:28 Central Standard Time, March 19th, Tuesday, 2024. I built the thesis for this exact trade many hours ago and have it all documented on video. So I hope this helps all of you. Would love to have more of you in DIIO, only if it's right for you. And I will time lapse the rest of this trade as we approach our mythical 107% take profit zone on this 10x leverage Solana trade. So the cool thing is, just when you leverage, a trade like this, I put down 1,391 real dollars, and the value, as far as the way the exchange treats it, for my profit and loss purposes too, right? Even if this goes against you, it goes against you relatively quickly, about 10 times the speed of spot trading. So the exchange is treating this like it's $13,830. Again, if I put 10 times this amount in there, the exchange would treat it like it's $130,800, right? Something like that, $138,000. That's the math. And that is why my P&L on a $10,000 position, or a $13,910 position, would be 10 times this size, so it would be $11,600 as we speak. And you have to be at the level of consciousness that will allow you to handle that velocity of money. Not everybody's there. You can't play that game if you're not there. You just can't. You would never survive. But some people are there, and I invite those people to join us as well if you feel called to. So anyway, that's the game, and we're getting close to this thing faster than I thought. So I'll time lapse it. We'll see how we do. If I need to take profits earlier, I'm happy to. 81% isn't bad, but it'd be pretty cool to see the whole thesis come through. I almost care more about that than I care about the money. So we'll see what happens. All right, stay tuned for the final. Just checking in for a second. Wanted to show you guys a bit of a retrace, right? I don't know how much, would reversing in the opposite direction of your trade away from you affect you. This is a time trailing stops might get knocked out. This is a time psychology may get you, and maybe for the good, you decide to bail out at 950, right? It's not a bad day relative to this trader's account, relative to the gain, right, which would still be in the neighborhood of 70%. However, we still have overwhelming data in support of our original thesis, so I haven't really, flinched much today. Not all days are like this. Some days can be more challenging. You may just not find the setups you're looking for. But I did want to kind of just share, on our way to our take profit, that we did have a bit of a retrace, which is kind of expected after extreme volatility. As I mentioned, people would FOMO into the shorts, wanting to catch the obvious down pressure, and then the market makers have to take that money, right? They have to take that free stop loss money. And so they're just going to kind of jump in with some longs. This is usually when amateur traders, for lack of a better word, will get stopped out, right? They FOMO'd in. FOMO usually leads to loss. And then price action on Solana retraced just enough to take a lot of money from all of those people that FOMO'd into, probably 10x plus leverage short positions. And I've been one of them. That's how I know what they do. So anyway, we will time lapse this and finish it out. Just wanted to share some narration, lessons learned over the years for anyone who finds benefit. All right, flipping this back on, still in the short, overwhelming up pressure, sticking to the thesis at present until I start to notice, changes that would make me think otherwise. Down to 790, right, about 800, watching for the retest of this line, right, this line that was formerly a support. So watching for the short-term, what we call bearish retest, where now we are just double checking to see if this line is going to serve now as a resistance. I am looking at the 4-hour, the 1 hour, just a lot of different time frames other than small ones for Bitcoin. And from what I can see in the 1 hour and the 4 hour, just using Binance charts, right? So I'm just literally tracking organic price action of Bitcoin. So far, it looks like the 2 and 4 hour still have room for expansion, still in a relatively, dominant downtrend. Still have a lot of room for breakout propensity according to our data. And I just really don't see any reason in time frames as small as 10 minutes to bail out of a short. So we're kind of watching price action, flirt from 1100 to as low as 800. So as I talk through this, just think to yourself, again, this may be price action that's perfect for somebody to kind of test their psychology. How would you feel if you were up 1100, came back down to 800? Would you panic? Would it mess with you? Would you bail out? Would you have the ability, or at least could you develop the ability over time to trust the data and see what happens? Maybe, putting a stop loss in at kind of like that point that truly invalidates your thesis, right? We're nowhere near that point for me. And so, but you saw that I stuck to my thesis on the last video to the point that I lost money. I was $230 up. I allowed it to retrace all the way back because for me, that trade was you're either going to spend 36 bucks or you're going to make 800 or 1,000 or something like that. And that's what it ended up being. My asymmetry was tight. Even on that trade, it was a 20-to-1 risk-reward ratio. That's how I particularly choose to play. So we're actually getting to watch, anything's possible still, but we're getting to watch the bearish retest occur. I'm still watching overwhelmingly bearish energy out of Bitcoin, and I am keeping an eye on the 4-hour time frames with a new algo that I'm considering adding to the DIIO arsenal. More like a supplement, not really an algo, but just a supplement that I believe could serve to give people a little bit more insight on expansion, when it's more probable than not, right? So we'll see how that goes. But right now, I feel like 13 minutes from now, I'll get a little more insight. We will also get to see if this bearish retest occurs, where price action treats this former support as a resistance, and then we can go down. And meanwhile, people can ask themselves, how would I feel if I went from a 75% gain back down to 60? Would it cause me to freak out and sell? Would I have been so conservative that I have my stop loss in place? None of those are wrong answers, but you have to just do what's right for you. So, again, kind of dragging out a little longer. Well, I can't say it's longer than I thought. I think I gave myself till about 9 p.m., give or take, to see this through. That's still about my expectation. So I may squeeze a run in. I have about 2 more hours to see what kind of expansion we get with any potential, for a big push out of Bitcoin to the downside. Bitcoin has a lot of room to run to the downside right now. So I'm not counting on anything, but I'm not putting anything past Bitcoin or Sol when it comes to negative price action right now. To me, this is just a moment of up pressure. If you look at that Sol chart from the time of entry, it's been massively dominated by down pressure. And so, it is interesting that people can get overwhelmingly emotional in, just a couple moments of up pressure in what would otherwise, based on logic, be a clearly bearish dominant trend. But again, without data, without optics, it really is tough to know where you stand, where the statistics lie, what's likely to happen, what's likely to not happen, where to draw the line and just call it quits and take your profits and be intelligent. And so the less data you have, I think the more logic there is to making an intelligent decision of taking profits when you have them, right? So anyway, yeah, next decision, I think, next data point is going to come to fruition in about 11 minutes. I'll by then probably have an idea of what's going on with this line, and we'll see, what to do from there. But again, a lot of volatility. That is the name of the game. that we play. And again, we have to appreciate the volatility that goes against us, because it's that same volatility that allows us to take advantage of the volatility when it works in our favor. So, all right, just checking in because this is a great example of a micro time frame bearish retest. And we call it a test because there's no assurance as to whether or not this line will be respected as a resistance or not. But it is a logical place to test. All right, so that's what we're doing, and the money doesn't matter. It's just data driven to a huge extent. So, all right, we'll check back in a bit. Hopefully, we can wrap this up and take our profits and have a truly cool, successful trade sequence. We'll see how it goes. I'm unpausing this just for a moment, so that as a attempt at sharing psychology and education with someone, you'd have to ask yourself at this moment in time, would you keep your trade open, right? Now we're down to 570 ROI. So this is where I think it really kind of like depends on your relationship with money, your willingness to trust the data, what time frame you associate with your thesis of down pressure winning this fight, your belief in continued downside acceleration of Bitcoin, right? At this point, we've lost half of our gains, right? That would be one way to look at it that would be accurate. Or you could look at it that we're still up 38%. So you could look at it like however you want, right? And I think that that's a very interesting thing when it comes to this game. So I just wanted to share this. There's no right or wrong answer, right? This is just an exhibition trade. My intent is to see if I can get the full thesis to come to fruition, which is pretty intense, right? It's a tall order to take this trade down even to the low 160s. So may have to abandon it at a certain point, where I don't want to give everything back, but I'm going to try to stick to the data. I'm more concerned about showing the effectiveness and the accuracy of technical analysis in its entirety, if I can, than I am about watching money fluctuate and so forth and so on, right? If it gets toward my entry, I might as well take a little profit and re-enter, right? If I needed to. However, if it doesn't, and I'm still, $400 or $500 ahead, and then it starts to turn back down, which could happen anytime now, then I want to be comfortable, just kind of remaining calm, keep my wits about me, and be okay with the fluctuation of money that's not real yet, right? In a way, it's not real until it's realized. And so, watching different things, I'm comfortable with fluctuation to the downside, and I'm right now just more concerned about seeing if we can nail the entire trade sequence than I am profitability. I want people to see, if you have conviction on a longer term swing trade, that you have to be prepared for this degree of volatility. Otherwise, your best bet is to hold on to the profit that is clearly a great profit. Like when you're up 75 or 80%, just take it, right? So you have to decide what kind of trader you want to be. And like I said, at the same time, what's your thesis? Where do you stand on it? What's your conviction? So I'm watching this. I think on a normal day, I might have put in a stop at a 20% retrace, right? Because the extra $400 and something that I think this trade stood to gain, if it went all the way, has already been lost in the retrace. Right now, I have to wait for it to come back. Again, I'm more interested in seeing if the TA will do what I said it would do, or what I said was possible, at about 2 this afternoon. I still actually think that that's possible. and I'm interested in seeing whether or not I can achieve that. And at the same time, it would not be an unintelligent move to take profits when you're 75% up on anything, right? To do otherwise could be construed as greed. And so in this case, it has everything to do with me wanting to test the capabilities of solid technical analysis and, what I think is possible with the algos, looking at Bitcoin and looking at Sol as a case study. I want to really conduct an illustration of what psychology of money looks like and the questions that you have to ask yourself. And then I want to point out some logic to people that maybe hadn't thought about it, just kind of saying, hey, would it have not made sense to take profit at 1200 if you expected a retrace that could take you back 50%, meaning that you'd have to wait to create, 500 that your position fluctuated to the downside all over again, right? And again, these are just arbitrary numbers, but no matter what the number is, I would have had to ask myself, am I willing to take that 80% position and write it down to 70%, 60%, 50%? At what point does it make sense to bail out and find a new trade? I know there are some of us who believe that securing an overall great position, which I believe this one to be, is more important than the profitability, right? Let's secure the position and then let's, have conviction about its performance. I don't know that I always agree with that, but I want to point out in the midst of these fluctuating numbers that mean nothing until I take profits, as it says, they're unrealized. It points that out to you. So as these numbers are fluctuating, I want to point out that logic of, would it make sense? Would it have made sense on a normal day for a normal person to take profits at 1100 when you literally just created 75% on your capital out of nowhere in 5 hours? Yes. Anytime you're up 75%, probably makes sense to capture the profit, realize it, and find another trade and repeat this beautiful skill that we have the ability to duplicate as often as a daily basis. So I wanted to work through some psychology. I wanted people to see this number at a place that people might say, man, he's stupid, or he's crazy, or he's really convicted with this whole data thing that he's got going on, right? And nobody's wrong or right. I have, my goal for today, and I think I place a bigger emphasis on having a video for the duration of, our group, our website, our training, that on March 19th of 2024, in a Solana trade, I was able to utilize data to calculate the direction of price action with a high degree of statistical probability. I was able to dictate or determine a high probability of the time it would take for the price to get to my target with a high degree of statistical probability, never certainty, but just statistical probability. I was psychologically and intellectually committed to the result, which is approximately 100 to 107% gain. I was committed even in times of extreme volatility, right? To the tune of a 60% retrace on the money that I had made, whatever it is, right? We went from 1200 to 4 something in this moment of up pressure, right? It's kind of not fair because I'm looking at data that makes me feel a bit more comfortable, but I still had to, even though I have the data, I still had to look at that and ask myself how I feel about it. And based on my relationship with money, again, this being somewhat of an exhibition trade specifically, I feel comfortable, I feel comfortable, and it's more important to me to be able to share the education with people, show that it works, than to realize the gain of 80% and then call it a day. I think it, in the longer term, big picture of the group, for the purpose of believability as defined by Ray Dalio, is more important to me to watch this trade sequence come to fruition exactly as predicted. I sound like that guy Carl the Moon on, on YouTube right now. But, I think there's a lot to say about that. And so I'm right now, I'm watching some really small time frames that show me that price action is likely to come back down, right? So as I shift, you can kind of see what's happening on a different scale, right? So I'm watching trends, as funny as it is to say that, on very, very small time frames, and I see the trends reversing. So this is a good opportunity to go in on a short. And if you have this data we call the trend sniper, it allows you to find opportunities to ride momentum. You're still taking a chance because these are very volatile assets. So, the best way to win is to go in with lower leverage so that you don't get knocked out or have your stop loss create a situation that's too painful for you, and to play the game that way. But great example of very, very tiny time frames showing signs of potential exhaustion, potential for reversal back to the downside, which would take us back to the unrealized profit of what so far has been a height of, I think, about $1,100 US. So we're gonna play that game. I do have the Bitcoin chart going, and it did retrace back up. It bearish retested the rectangle that I had put into place. So it retested its own support. So far, not a successful, I would say it is a successful bearish retest so far, which just means that it does seem to now be respecting the bottom of that rectangle as a resistance, right? That was formerly a support. Potentially now it's a resistance. We are seeing sell pressure come into play as it approaches that rectangle, and so we're gonna see how it affects Sol, and we'll see if Sol doesn't go the distance for the trade that I built this afternoon. And I'm just wanting to walk people through the psychology of it all as this money and these numbers are shifting on the screen, because it's something that any and all of us who trade will have to deal with, understand, manage, and figure out, right? What is our personal trading persona, and how do we feel when we see numbers go up real high and when we see numbers go down real low, even if it's percentage based, right? So so far, I think we're in a good spot with this trade. It's performed really, really well. I'm still in it, obviously. You saw it retrace. I purposely did not want to remove, or filter out this part of the experience for what I'm doing right now, specific to this trade, because I'm interested in truly seeing if we can get this to go all the way. I'm tempted to take partial profits if and when we get down to the 167 range again, but if I still see continued downside, and I still see a lot of downside being probable, then I will probably continue to let it move in the direction that it's moving. There's a 45-minute linear regression channel that I want to see continue breaking down, right? And it just needs to go flat for me to get to my goal. So I don't need it to break down and go into a true downtrend on the 45-minute. I would just be looking for it to go flat. Right now we still have blue movement monitors on the 4-hour. We still have blue movement monitor on the 1-hour. We were significantly overextended. Now we are not. We are kind of reverting to the mean on the 1-hour, giving it a chance to breathe. not quite reverting to the mean on the 4 hour. I expect us to revert to the mean on the 4 hour eventually, and for purposes of this trade, the goal would be to get it to come back down just in time for the take profit, right? So we'll see how this performs, and if I need to bail out of it at, for me, a loss, a psychological loss, then I will. I won't let this go into the negative. It just wouldn't make monetary sense. But I obviously have committed to the duration of the trade that I put out as I made the video, and I would like to see that come to fruition. I think that would just be really cool, again, to have as training material, as material on psychology, and just be a neat reference that all came together in one day if it goes the way that I hope it does. And again, I still see strong potential for more bearish movement. So we'll see what happens, and we'll see if I don't have to pull the plug on this, or if we can continue to move down the road to the south, closer to those 160 figures. If we get there, I'll take profits. I will cap the video. We'll finish it. We'll celebrate the accuracy of nailing direction, propensity, time frame with amazing, precise accuracy in real time on March 19th, 2024. So we'll see how it goes. And again, the question would be, do you have the psychology needed to handle this volatility? Can you treat it like points in a video game and disassociate from the money, right? And if not, then you probably at a minimum want to play the game where when you have a really nice profit, you just take it, and that's your persona. Your persona is not to stay committed to this insane thesis that I have, that I feel comfortable with. Doesn't mean that the next person needs to feel comfortable with the same thesis I have, right? I feel comfortable based on my knowledge, my data, my experience. The next person obviously does not have to agree with me or treat money the same way I do. But I want people to see what's possible, so I'm committed to the lesson, the data, and the technical analysis, more so than I'm committed to the monetary side of it, right? Again, I won't let this go negative. I'll probably take profits if we get down to a couple $100. I'd probably do something just because it would start to deviate from my thesis at a certain point. However, right now, I'm still in that threshold. We just had a very extreme move happen very rapidly that took us to, in this case of this trade, the $1,100 profit range. It happened faster than it was supposed to. It was supposed to happen. It just wasn't supposed to happen that quickly. And you have to make your peace with time relative to money. And so if I look at this all as volatility, and I say, you know what, 573 is probably where I was supposed to be right now. We happened to, in a volatile moment of time, shoot down to 1100 quickly, but that was volatility, not true trend. Then I think you can become a little more understanding of how it works. So I think right now we're still very much in a bearish trend, but there's real money on the table. And so I would also say that some people, some trading personas, depending on your knowledge base and where you are, should absolutely have taken profit at $1,000. Like, why wouldn't you take profit at 75%? That's that much more that you're allowed to lose in the future, or that much less that you have to win to justify being good at your craft of trading. So anyway, I hope this is helpful. Here we are, 535, strong retrace so far. That bearish retest of that line that I shared has not held, but we are really looking at tiny time frames, right? If we go to something like the 4 hour, we may have a different perspective, right? it opened below that line. So there's a decent possibility, not probability, but a decent possibility that this is volatility, that the price gets sent back down, and on a 4-hour time frame, which we have, how much time do we have here on a 4-hour? 3 hours and 17 minutes remaining, that this could actually close on the bottom side of this and be a bearish candle. That's how much time we have before we will know, right? Whether or not all of this green that might make me look insane for leaving metaphorical, figurative hundreds of dollars on the table for the purposes of this trade might make me look crazy. But if we fast forward into the future, like I said, there is a decent possibility, perhaps even a probability, that this candle closes south of 170. In fact, south of 168, and ends up bearish at the end of 3 hours and some change, 3 hours and 16 minutes from now. So we'll see how it goes. But again, I share these things in the midst of a 50% retrace on my profits so that people can decide what kind of trader they are, and they can play the game accordingly. They can plan accordingly. And I'm also much more committed to seeing if I can call my shot with regard to this trade and TA and data and everything else than I am interested in, bagging $1,000, right? Or bagging the extra $500. I'm just significantly more interested in knowing the data works and being able to prove it to people, because I think there's a lot of people we could help with this data if we can just simply show that it's accurate and it is pretty awesome in the way that it works. So that is my moment of pause. Anything's possible. I could totally be wrong and walk away with $300. But until my thesis is truly invalidated in a couple places that I'm looking at, I'm going to call it volatility, and I'm not going to worry about it too much just yet. All right, I will pause and we will come back later. We'll see what happens.